So clients investing with EQ, what is the real difference their money's making?
Yeah, so I mean, it doesn't just make you feel good that you're aligning your investments with your values. There also is a real world impact of doing so. Money has power, and shifting it from investing in things that are bad for people and planet to things that are good signals to the market that these things matter. And over time, if enough people join you and join us in investing sustainably, what will happen is that financial markets will start to value things differently. So at the moment, they might value short-term performance, but what we'll start to value is their total value creation for all of their stakeholders, their employees, the environment in which they operate, and therefore associate higher share price performance to those that are doing well and lower to those that are not. And that will, in effect, affect their what we call cost of capital, or the cost of doing business, essentially. And over time, what we'll see, and we already see this happening in investors that are favoring renewable energy over coal, for example, in that it really affects their bottom lines and how quickly they are to expand their businesses. And if more people invest sustainably, we'll be able to expand businesses that are creating great value for people and planet, and reduce the, I guess, ease of expansion of businesses that are actually making the world a worse place. So that's one thing, signaling to the market that impact matters. And then the second real world impact is through shareholder stewardship. And that's a big term, but what that means is that if you are a shareholder, you basically own part of loads and loads of companies. And with that, you have some power to change them. And if you're investing sustainably, your investment managers are much more likely to use that power to vote for a, I guess, positive direction of the business rather than keeping them back. So for example, there might be an annual general meeting of a company that you might hold in your portfolios, and there might be something called a climate change resolution. So all the shareholders need to vote on whether a company might set better targets on climate change, or even on maybe whether they should pay the living wage to their employees. A sustainable investor is much more likely to vote proactively on these things, and one that isn't taking this into account might not. And that's one way in which you can then use actually your capital to create real world change in the companies that you invest in. And then there's something called, which is also part of stewardship, which is engagement. So a lot of us, so as EQ, as well as the fund managers that we work with, they have basically direct relationships with some of the company management. So they might hear best practice. So we do this on multiple different themes every year, and we report on this to our clients, but they might hear where best practice is evolving. Let's say somebody might have a new way to measure biodiversity impact. And I might then go to the company, because I hold this relationship with them, in order to share that best practice and therefore improve their overall impact on people and planet. So there's many ways in which sustainable investors can have real world impacts, and the great thing is everybody can be part of it.